Nigeria has recorded its first quarterly trade deficit since July 2016, as the value of exports fell by about 9.7% in the fourth quarter of 2019, while imports were up by 37% in the same period. National Bureau of Statistics, in its latest foreign trade report, said the value of the nation's total trade rose to 10.1 trillion in Q4 2019 over the value recorded in Q3. I have with me the CEO of Cowrie Asset Management, Mr. Johnson Chukwu, who is here to make sense of these numbers and discuss trade as we know it in Nigeria. You're welcome, sir.
Thank you for having me.
Good to have you with us. So, we've just went through the numbers a few minutes ago. I would like to get your thoughts on this trade deficit. Is it coming at a bad time, considering where we are? You've seen oil prices and what's going on. I know it's lagging because that's Q4, why in Q1. So I want to get your sense of the numbers, and is this something that foreshadows what's to come ahead of 2020?
Well, to say if it's coming at the wrong time is an understatement. It's coming at the worst of times, particularly the period when we are seeing slowdown in foreign portfolio investment. So the offsetting source of cash flow or foreign currency inflow that would have come from foreign portfolio investment has also declined. So at a point when you are not having, so in effect, we're going to be having, if care is not taken, a negative balance of payments, because your balance of trade, which is actually the buffer we have, where our exports of goods is always higher than our import of goods, has now turned negative. And like you said, for the first time since 2016, and the basic thing is that in last quarter of 2019, we still saw oil price at the neighborhood of $54 to $57, $58 per barrel. And for now, you are witnessing our oil price that had dropped to about $33 today.
Right.
And so for me, if at the point when we are earning oil price was around $57, $58, we had a trade deficit. Now that oil price had dropped below $35 per barrel, what is the first quarter going to be like?
Right.
But what we should also understand, what led to the negative trade balance? A couple of factors we seem to be papering over. And I think that's what we should dwell on. In the first place, the border closure was actually meant to improve our balance of trade, because we are shutting out a lot of goods coming from the land borders.
Right.
But unfortunately, we did not recognize the fact that we're also shutting out a lot of formal trade going through the land borders. A couple of Nigerian exporters export to the West African markets, and those exports are formalized, unlike the imports coming from the land borders are not formalized. Okay. So what we have had is that we've had a shift of importation from the land borders to the sea borders, which are now captured in our balance of trade. So whatever you try to shut out at the land borders has come back and now come into the formal trade structure, and is now captured as part of the 5.3 trillion import for the last quarter.
I see.
But unfortunately, because we shut down the borders, the export, which we already normally captured in our export, like the pharmaceutical product we export to West African countries, the cement we export to West African countries, the beer products we export to West African countries, confectionaries that we export to other West African countries could not go. So what we did was we shot ourselves in the foot. We couldn't export as much as we were exporting, whereas we have rerouted the imports through the seaports. And we must recognize that. So we must begin to ask ourselves, the border closure, has it achieved any positive, given that the figures are saying otherwise?
Right. Excellent question. Yes, so that's a very good analysis there. Thank you, sir. So I want to get your thoughts on the trade sector, yes? If you look at the quarterly performance dating back to Q1 2018 all the way through to Q4 2019, Q3 2019, Q4, trade, as a sector of contributing sector to GDP, recorded a recession. So I want to get your thoughts on the challenges. Can you speak to the challenges facing the trade sector right now, and then possible solutions? I mean, you already mentioned border closure one, but any others as you look at how trade is performing with regards to GDP?
One of the greatest challenges the trade sector is facing is low purchasing power, low consumer purchasing power. We've seen a continuous erosion in the purchasing power of average consumer in the country. We are dealing with a high level of unemployment, which at the last count, the last population report said about 23% of unemployment. They are dealing with gradual erosion in purchasing power as a result of continuous increase in inflation rate, devaluation, and all those factors. So we're not seeing, it's just maybe this month, that we are going to see, or last month we're going to see an increase in the average salaries and wages of employees. For the past 3, 4, 5 years, we've seen a freeze in increase in the public sector wage bills. I mean, in terms of pay per individual. We've not seen an expansion in employment as to create more people who are earning income coming to spend money. So what we have seen is continuously we've seen lower purchasing power, which has affected the volume of goods and services that people can consume. I spoke with somebody who is into the consumer goods industry yesterday, and he told me that if you go to an average supermarket, you realize that the dollar value of their export, their trade, or their sales had dropped drastically. Even if you look at it in terms of volume, number per unit, or consumption per head, you realize that those figures have also declined. Because over time, of course, you know what happens when inflation takes place.
Yes.
That you can no longer consume the same quantity of goods and services you are consuming with the same level of income.
Right.
So we've seen an erosion, and that's the greatest challenge the trade sector has faced. Then the border closure only exacerbated. Go to the malls. So you realize that, look, the average Nigerian, of course, when you are saying there's an increase in the number of people who are in abject poverty.
Right.
So these are reflections of lower purchasing power. And reality is that we have dealt with this for quite some time, and that's why the trade sector has remained in recession, because consumption is weak. And that's also beginning to transmit even in the manufacturing sector. Because reality is that when you manufacture, if you look at the purchasing managers index, you have seen a decrease in purchasing managers index because the initial excitement that they could borrow at a lower interest cost and produce cheaper, but they ended up stocking their warehouses. And therefore, they were not able, because the final consumers had no income to consume those items. Right. So as the warehouses are built up, the optimism of manufacturers to buy, impute, and produce more became weakened. And that's why you see also a slowdown in purchasing management, which will eventually reflect in a slowdown in manufacturing. Wow.
Astute analysis. Thank you for that in-depth answer there. Okay, so let me also take you now to the makeup of exports for trade. We saw, again, crude oil made up 76% of total exports in Q4 2019 versus non-oil, which was the remaining 23.9%. This still brings up the talk of our dependency on crude oil as a major FX earner. When, if ever, can we divest away from that? Because it continues to show up, you know, as the bulk of exports for trade.
The question is when and if ever.
If ever.
So let's take,
exactly. Okay.
Let's take both of them as a single question.
Yes.
We will divest ourselves of this dependence on crude oil as a one major export commodity when we are ready to take the difficult political decisions. And it is purely political decisions because those economic decisions are hobbled by political considerations. Take, for instance, the issue of refined petroleum products. Right. There's no justification on planet Earth why we should continue to subsidize refined petroleum products. We are not improving the welfare of citizens because if that subsidy is actually helpful to the society, we shouldn't be seeing the increase in the level of poverty. Right. We shouldn't be seeing the increase in the level of unemployment if it is of economic value to the society. So clearly, for me, it's a waste of economic resource. The key thing that there's areas we can channel those resources and achieve better economic mileage. Okay. Should we put that money in infrastructure development? Should we put those monies in improved quality of healthcare and educational standards? Our educational facilities? You are likely going to have more enduring effect than when you continue to subsidize consumption. But most importantly, the fact that we continue to subsidize refined petroleum products simply means we have made it impossible for refineries to set up in this country. And therefore, we have elevated the amount that we are spending on importation, which is contributing to the negative trade balance we are facing today. So, the reform and transformation of the country so as to reduce the dependence on crude. Take, for instance, assuming we are refining petroleum products, we should be exporting petroleum products.
Right, to other countries.
To other countries. Right. That will further diversify our export earnings from crude to also refined petroleum products. Right. We could have developed our petrochemical industry. We could have developed the input for our pharmaceutical industry because a lot of pharmaceutical products take their input from petrochemicals. So the amount we're spending on importation of input materials for pharmaceutical industry could reduce. We could have also strengthened even a couple of the manufacturing activities. Plastics, resins come from petroleum products. So, one, we would have diversified the products we export, and we also reduce the products we import by taking one decision to take out the petroleum subsidy. Second issue is that we have a huge population, we have cheap labor like China has, but we're not optimizing those advantages we have. Because we do not have the supporting infrastructure that will make it this country attractive for manufacturing. Today, go and look at what's happening in Vietnam. Go and look at what's happening in Bangladesh.
Right, they're growing.
I mean, when we were growing up, Vietnam was a basket case. But today, Vietnam is transforming into a first world, the way they are growing. And should they continue that growth, in the next 30 years, we'll be writing case studies on how Vietnam transformed.
So, Lisa, thank you for that. Okay, another thing, I wanted to quickly take you to our partners, our major trading partners. So, major export trading partners and the percentage share of the Q4 2019. So, India is top there, 13.1%, Spain, 10%, France, Netherlands, Ghana. The major importing trading partners, again, India, then now we have China, the USA, Netherlands, and Belgium. Only one African country is showing up there, that's Ghana. Can you possibly see the African Continental Free Trade Agreement possibly improving this in about a minute or so, if you can possibly answer that?
Well, I think yes. The answer is yes. And the simple reason is that, but it has to be supported by other infrastructural input that will improve trade within African countries. Today, we don't have efficient transport system across Africa. You cannot fly from Nigeria to Guinea-Bissau or Guinea-Conakry. You really have to go through Senegal and several other countries. We don't have efficient rail transport connecting West African countries, talking to African countries. We don't have efficient road transport facilities connecting African countries. We don't even have ship voyages that emanate from one West African country to the next, or among African countries. If you have to export goods to Angola, you may have to go to Antwerp first, and then come back to Angola. So we need to improve this supporting infrastructure as to make trade among African countries more effective.
We're going to keep you here. We're going to take a quick break. We'll be right back. I have a couple more questions for you. You're watching the Global Business Report on Arise News. Plenty more. Do stay ahead. Welcome back to the Global Business Report on Arise News. Fascinating discussion here on Nigeria's trade statistics. We're speaking with the CEO of Cowrie Asset Management, Mr. Johnson Chukwu, who is giving us some very in-depth answers here to these questions on trade. Mr. Chukwu, thank you for sticking around with us. You've just wrapped up on how we can improve trade with African countries, because I was just asking you, Ghana is the only African country that shows up in our top major exporting and importing partners for Q4 2019. So you talked about that. Now, my follow-up to that is, does the border closure in any way threaten the African Continental Free Trade Agreement improving with our brothers and sisters across the continent?
Well, what I would say is that it's not that it threatens, it negates the spirit of the African Continental Free Trade Agreement. We can't be talking of a time when we signed to subscribe to the African Continental Free Trade Agreement, and at the same time we're closing the borders. Like I also said, that the border closure has not proven to be of economic gain to the country. But most importantly, it negates the spirit of African Continental Free Trade Agreement. And my concern is that the fact that we think we are the elephant in the house may delude us into not taking the necessary measures that will make us a competitive economy when the African Continental Free Trade Agreement comes into being or is effectively implemented. Remember why I said it's not that it threatens it, and it negates it instead of using the word threatening, because we were even among the last signatories to the African Continental. It had actually come into force before we signed, which means the other African countries were ready to leave us behind if we're not ready to move forward. So for me, it doesn't threaten it, but it negates that spirit. And let me tell you, the African continent will be a market, a single market of about 1.2 billion people.
Yes.
Expected to grow to 1.2 billion people. So if Nigeria decides to stay away from that, 200 million will not stop a 1 billion market. So they will just pack us by the side.
Right.
And then the rest of Africa will trade among themselves. So I have actually argued repeatedly, look, we need to know this is coming, and we need to take measures to make our country the preferred destination for manufacturing in Africa, because we already have a local market. with the 200 million population, the largest populated country in Africa, if we have the supporting infrastructure, companies will rather produce here because I said we already have cheap labor, and then export to other African countries. But if we continue to play the ostrich, they will go to Ghana, produce, or even Benin Republic, and smuggle into the country. So we really can't pretend that, look, because we have a pole position, because we're in a midst of very small countries, we continue to have all of a sudden on them. We should look at what is our long-term objective as a country. How do we want to position the economy? As a manufacturing hub, or we want to continue to live the way we are living?
Okay, excellent. Now, I want to also ask you about some of the performance of some of these some of our exports. With Q4 versus 2019 versus Q3, we saw agricultural exports grew. However, raw materials, solid materials, manufactured goods all fell. How can we look at propping those other sectors up, and even agriculture? So like, you even get your thoughts there on how well we're performing. But that aside, the others ones, so solid materials, manufacturing. How can we prop those up in order to improve trade in those sectors?
You know, earlier I had said the area like manufacturing, most of the export of the manufactured products from the country is go through the long land borders. So the closure of the land border must have affected manufacturing exports. Okay. Similarly, to some extent, some solid minerals also go through the land borders. So these items may have been affected by the border closure. The agricultural product, we're beginning to see a lot of agricultural products going to places like England. Probably as a result of the ongoing, of course, the Brexit has actually become effective.
Right.
So you've seen a diversification in their imports, British imports, and they're looking at other countries they can import from. So I think we've seen that improvement coming from countries like Britain. But ultimately, you have to look at how do we grow these other export commodities as to minimize the weight that crude oil currently has on our export earnings. But most important thing is that we're not adding value to these export commodities. And that's where the concerns are. Your solid minerals, what are you exporting? You're exporting sometimes limestone and what have you. What is the level of refining or value addition going on into those products? The agricultural products you're exporting, they are in the raw format. Your cocoa export is in the raw format. Why are we, what the input that the likes of Cadbury and some of these confectionery companies are using, are they refined, are they processed here? Or do we still export them and then get them processed and they buy them as semi-processed items as their input materials for their manufacturing activities? Those are the things that should bother all of us. Because that way, we're able to improve our export earnings, the value of our export earnings if we have value addition to those products. We're also able to moderate the volume of goods we bring in, because a lot of times we bring in goods as semi or intermediate goods, which we have exported as raw material. And all this will happen or will be addressed at the level of strategic planning at public sector level.
Fantastic. Now, I want to follow up on you talking about us seeing ourselves as the elephant in Africa, and while smaller countries are moving ahead. I'm not sure if you heard this, but Namibia last year, this is a country with 2.5 million people, last year became the first African country exporting meat to China. This year, they became the first African country exporting meat to the United States. It took about 20 years for them to get that deal going. I want to get your thoughts on us being surpassed by this small country, which I don't know, you can probably fit in maybe Lekki or Mushin or something. But why are we really falling behind? Is it already happening with regards to diversification of exports and all these other smaller countries setting up these deals with big countries in the East and West?
Well, if Namibia is exporting meat to China, to United Kingdom, and we are not even producing enough meat, the yield on our cow, from our cow, is far below the yield in any other part of the world. And then we are still going about with herdsmen moving cows around instead of having them in their farms and then nourishing them and allowing them to produce to the same quality and the same quantity, or in terms of the same level of productivity that you have in other countries.
Yeah, okay.
Yes. So the key thing is this. If, I always say, if you want to develop your economy, you have to be strategic about it. Like we said, Namibia, it took them quite a number of years to achieve those exports. One, the issue of quality control must have come into place.
Yes.
Issue of preservation must have come into place. Issue of export facilities must have come into place. Today, Kenya is the largest exporter of flour globally. It didn't just happen.
Right. Took years.
Yeah, it took years. And they have the facilities to export fresh flour that in the morning you wake up in Amsterdam and you have flour that was plugged in Kenya the previous evening.
Wow.
So what are we doing? Today, we produce enough cement as export, but we don't have a single facility for exportation of cement in the country. So how come we have not built, having ratcheted up capacity in cement manufacturing to the level we can export cement, how come we have not built the export facility that will support export of either bulk cement or even bag cement?
Mr. Johnson Chukwu, CEO of Carry Asset Management. It's always a pleasure to have you.